Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Aengus Kelly. Aengus is the CEO of AerCap, the largest lessor in the world, and he's joining us for the purposes of our Aviation Leaders Report. I should say we're recording this in late November. Aengus, thanks as always for joining us. And before we maybe get into some of the meat of the conversation, do you want to talk to us a little bit about how customer performance has evolved over the course of 2023?
Airlines have reported record profits for the most part in 2023. We've seen an extremely strong rebound over the course of the last 2 years, culminating in many airlines, as I said, reporting record profits. The issue why the airline stocks, however, are not reflecting that and why the multiples that they're trading at are so low is investor perception around the cost base that the airlines have going forward, the fixed cost base, particularly pilot contracts, where we now have the first $1 million pilots. Incredibly, we have the first $1 million pilots. We have pilots earning base pay that are captains of wide-body airplanes earning over $400 an hour. You add on top of that pensions, healthcare, overtime, and that's how you get to the $1 million issue. Now, in addition to that, of course, there is concerns as well from investors about the stability of demand at these elevated yield levels. That's because of course, the cost of living, rising interest rates, that the consumer has less disposable income. What I would say is that there's no problem about demand, and speaking to airline CEOs, demand is there. The question is, at what price level is it there? Now, from an aircraft lessor's perspective, whether an airline makes $1 billion or zero doesn't impact how much they pay a lessor. What we need to make sure is that there's demand there and the demand is being serviced. That's what's important to us, and I'm very confident that will continue. So that would be how I feel about the airlines and how the perception is in the stock market, and not just the stock market, but private equity valuations for airlines too.
And maybe that demand piece, your perceptions on that from a geographic perspective, are you seeing, we've obviously seen the Asian rebound was later, but is very now real and sustained. Your thoughts on opportunities in that market for AerCap, are you focusing on particular geographies or not?
Not really. I think that there is opportunity around the globe. If I look at where we are placing aircraft, it certainly went with the recovery. So initially we did a lot of business in North America, then that moved to Europe, and then on to the Far East. So I think that, and also the Middle East, I should say, the wide-body demand has been different. The wide-body demand has been particularly strong. But overall, I think I could say that it followed the recovery. So as I said, first of all, we were in the Americas, EMEA, and then on to the Far East. But overall, demand globally is very robust.
And maybe if that's where we are now and where we've come to, looking forward, there are always macroeconomic issues, there are always geopolitical issues. Do you think we're at a heightened state in the context of either of those areas? And how do you see that impacting going into 24?
The geopolitical stuff is very hard to call, of course. Look, the world always has issues to deal with in that regard. Every few years there are geopolitical issues. We tend to get through them. It's hard to run a business based on managing those types of risks. We are a global business. It's a global industry. And one thing we know is that every year, bar like something like COVID, you'll see more people travel in this year than in last year. And that has always continued since the dawn of aviation. I think that trend, that structural trend, is definitely there. As it relates to monetary issues, monetary policy, if you will, and the impact of higher interest rates, we look at the 10-year Treasury was touching close to 5% last month. We've had a significant rally in Treasuries, and now we're more than 50 basis points beneath that number. So that is important, of course. However, I would also say that if I look over the last 18 months, from a lessor's perspective, the increase in interest rates has been passed on to the customers. So you have to step back and say, people get worked up about increase in interest rates. Increase in interest rates and an increase in lease rates to the airlines, that's not really a material number for the airlines. If you think about an airline's P&L, fuel, labor, airport charges, they're the massive costs. Fuel and labor in particular you're looking at 60% of the P&L. You look at ownership costs. First of all, depreciation, that's the majority of ownership costs. Interest expense is just a few percent of an airline's P&L. And whether the interest expense goes up for an aircraft by 30 or 40 grand is noise. If the airline can fill the aircraft, that incremental cost is not a driver of the decision to take an aircraft. The driver of the decision to take the aircraft is, do I have demand? Can it cover my cost base? And the cost base is driven not by interest rates. It's driven by what the labor costs are, what fuel costs are, and of course on the revenue side, can I get the yield I need when I put those together? And so where interest rates are much more relevant is, what's the consumer doing? How much disposable income does the global consumer have? And it's a global consumer. That's the key point. You know, look, in the US, we still see very strong levels of demand. And I think this Thanksgiving weekend, we're going to see an enormous amount of travel. It'll be record levels of travel, I believe, for Thanksgiving weekend. So there's plenty of capacity there still to travel. In Europe as well, as we look to next year, we're seeing very strong demand. And through India, through China, it's not all about the consumer in the US, particularly as our business is so global. Yes, the US is a very important market, but you know, it's less than 20% of our business too. The other, 85 odd percent is outside the US. And so consumers are moving at different speeds too.
Maybe pick up that thread on interest rates. Your perspective as a lessor, and the largest one in the world, when you see those rates move at the pace at which they moved, it seems as if we're coming to a consensus that we're in a higher for longer period, but rates have at least settled somewhat. As a lessor, what's your perspective on higher rates? Is it on the basis that, well, if as long as I can pass that on and my lease rate factors, that's just the cost of doing business?
Exactly. And, I would say our most profitable years from an ROE basis were when we had higher interest rates. If you go back to pre-financial crisis, 2006, 2007, etc., when we were at five-year money was close to 5%. Today we're in 4.4 odd percent. We've been able to pass that on. It's not like you're going to be, if interest, it's the velocity they move at, Joe, as you rightly point out. If interest rates shot up by 300 basis points tomorrow, can you pass that on? No, not in one blow. But if they go up gradually over time, and sure there'll be a bit of volatility, I think, as I said, because it's not a driver of the airline's ultimate P&L. The real drivers are other items in the P&L. Having the airplane is far more important than whether you have a very small part of your cost base increases. Now, don't get me wrong, airlines want to drive down all their costs, of course. But for the most part, whether or not the lease rate is 10, 20, 30, 40, 50, 60 grand, 80 grand higher, that's not the driver. And so we haven't seen an issue there. When we certainly see asset inflation, which is a welcome return too. So you have the ability to pass on the cost, and then we are seeing asset inflation. I'd argue the asset inflation is being driven perhaps by the supply side constraints that we all know about, be it with the airframe OEMs or the engine OEMs, and those supply side constraints are going to last for the rest of the decade, in my view.
Maybe let's go on to that supply side piece. How frustrating is it if you're trying to grow that balance sheet, trying to drive profitability, that we have an issue that OEMs are struggling, right? That they're struggling to get those production rates back up, and we might come to the engine point in a moment. But how frustrating is that, and just do you see it uncorking in the medium term?
Look, I think there's two things. Where do I find it frustrating? I couldn't care less about growing a balance sheet. That's irrelevant. We're here to make money. We're going to make money for our shareholders. They're the only constituent when it comes to the balance sheet that we care about. Now, we care a lot about our customers. So growing a balance sheet is irrelevant to me. Growing profitability and providing a top-class service to my customers is vital. So the real issue here for me when it comes to delays is a customer has a flight schedule booked into their system for next summer. They've hired pilots, ground crew, catering, airport slots based on a certain level of capacity. If that capacity does not show up, if they don't get the aircraft, or if they get the aircraft and it breaks down, or aircraft that they have break down sooner than expected. That's the huge issue, because they can't get out of their cost base. They can't get rid of the pilots that quickly. They can't change all of their fixed cost base. And for me, that's the real issue with the delays. It's not about whether I grow our balance sheet or not. It's about what's happening to our customers. And that's where I am concerned about how the OEMs are going to deal with the problems the customers are facing. Now, the airlines are adept and have shown themselves to be incredibly adept at dealing with adversity. Go with 9/11, financial crisis, COVID, SARS, you name it. They're able to deal with it. Surprises are the problem. And as I do say to the OEMs, it's planning ahead, telling the customer honestly, well in advance, you are not going to get the number of aircraft you think, or we're going to have more engines in the shop. We don't have spare engines. We don't have MRO slots to overhaul the engines. So you have to plan for much longer periods of downtime. Therefore, the airline can say, okay, I have to size the airline for the amount of seats that I can put in the air. That's less than I think today. And I think that is the biggest, I'd say it's the largest, but also you'd imagine the minimum that the OEMs can do for their customers.
Are they doing it?
No, not at all. They have a blatant disregard for the customers. They're not going to hit the production targets in Airbus. Pratt & Whitney are not going to meet the turn times on their shop visits next year. I believe they'll be much longer, and I think go on for a lot longer. And Airbus cannot put their head in the sand and say, that's not going to affect me. I'm going to produce the number of airplanes that I want to produce. And I don't care about Pratt & Whitney's problems. I don't care about the airline's problems. They can't do that. If you're an airline and you have, say, 60, 70 NEOs next year, and you might expect probably 40% of them to be on the ground, that's an enormous number. If you'd say each one of those is maybe 50, 60 million, that's 2 billion plus of equipment that you're paying for the capital cost, of course, the pilots, all the fixed costs that go around those airplanes, and they're not generating revenue. You can't then say, if you're Airbus, so I see you're in a real problem here. I want you to take another airplane from me and pay top dollar for it. Shell out another 50 million. The airline is bleeding because they don't have engines. And all the airline wants is engines. So Pratt & Whitney and Airbus have to sit down and say, enough is enough. We have to think about our customers. Now, OEMs, of course we all think about our customers, etc. But at the moment, there's too much internal focus on themselves and not thinking about the customers. Now, I know they have their supply chain issues, and Airbus will tell you if they're here, if I do what you're saying, where I divert engines away from production airplanes, then I have a whole other supply chain here that are making seats, aircraft parts, avionics, that they're betting on me, Airbus, being able to produce these aircraft, sell them, get the cash to pay them. We need to think about how can we work with the customers, with Airbus, to solve the issues that are in front of us today.
Taking the lessor perspective on those supply side challenges, because as you mentioned, lease rate factors are going up, asset values are going up, presumably extending and releasing or finding a home for a new aircraft is a very good environment for you to be in. When you look at these supply side challenges and you think about it from an AerCap perspective, what are your thoughts?
As I say, look, the first thought is to do with the customers. Without the customers, if the customers have issues, then we have issues with them. So the most important thing right now is you can't magic aircraft and engines. That's not going to happen. So the most important thing for the customers is to be able to plan for reality. And the OEMs have to realize that there is a ceiling on what they can produce. The engine guys have to realize there is already tremendous strain in the MRO network. When you have a system that's strained and piling more on top of it, things rarely go well. And that's what's going to happen in the next few years. We're going to have a strained system that's going to have a lot more capacity put on top of it. So I think that's where it starts. From AerCap's perspective, of course, look, we're the largest marginal supplier of aircraft to the world. If there's a shortage of aircraft, of course, that's a positive. If there's a shortage of engines, we're the biggest engine lessor in the world. That has positives. But my number one issue at the moment is around our customers and making sure that they can right-size their business for what is coming down the pipe.
And on that customer piece, I know we've talked about this over the last couple of years, and that deepening of relationships between airlines and lessors, the assistance we're given during COVID, and really becoming probably deeper partners over that period of time. As now they're fighting for lift, to the extent you have capacity, obviously price is key driver, probably the main driver. How important is the relationship side?
Relationship is still very important because most of the capacity that's available today comes from a situation where you probably have the aircraft installed with an airline. And what we're seeing at the moment is 80% of our leases that are expiring are getting extended. So we're not able to offer a tremendous amount because the existing airlines, the incumbents, want to keep the aircraft. And that's where relationships are important, that we're making sure, because they're bilateral transactions, extensions. Whereas when an airline is saying it's an RFP for 10 or 15 or 20 NEOs or MAXs, okay, that generally, if it's just a standalone transaction, is less relationship driven. It's more of a multilateral deal where there might be a handful of guys who might have the aircraft, and availability will be the main driver in that discussion today. So on the extensions, relationship would be probably very important. When it comes to a transaction for placing new aircraft on a standalone where you don't have something else going on with the airline. Of course, look, if you're in a situation where you're doing other business with the airline through an existing fleet of airplanes you have, providing engine support, etc., then different things come into play. But just standalone deal, availability of the metal is number one. Number two then would be price. And number three then was also important in today's world with the constrained issues that we have around production and supply. Airlines are saying, I want to go with someone who has a bit of clout, because there will be issues with seat suppliers, there will be issues with avionics, there will be issues with Airbus or Boeing as well. And you want someone who has some clout there to help you when those issues arise. So that's a complex answer to your question, Joe, but it does vary on the type of transaction that's been negotiated.
No, very fair, very fair. And maybe we talked a little bit on the interest rate environment, maybe bringing it broader to the overall aviation debt market. Can I get your perspectives on the availability of debt out there at the moment? Obviously, you're a large investment grade lessor, you can tap that unsecured market. But looking across the piece, whether it's the traditional banks, the unsecured market, maybe the new alternative lenders, your thoughts on the health of that market?
There's still plenty of money out there. I mean, we are selling large quantities of aircraft still. So that's clear. As you rightly say, look, if you've got the strong investment grade entities, they can always access significant amounts of capital. Lower down where you have unrated, non-investment grade secured lending, yes, that's certainly become a lot more expensive. Advanced levels are still reasonably good though. So we haven't seen a real choking off where the lenders have said, I'm concerned about asset value. So when you have a rising rate environment in a capital intensive business, okay, the rising interest rates are a cost for sure. But a bigger challenge would be, what if the lenders are saying the advance level is going down materially? So instead of getting 75% on 100 million of assets, you're only getting 65. You got to come up with that extra 10 million, and the amortization profile of the debt is steeper. That's probably a bigger challenge. So what we're seeing at the moment, as I said, we are the largest seller of aircraft in the world, of used aircraft. And so we do see a broad church of buyers still. It was heavily focused on the airlines, particularly for 2022 and the first part of 23. But now we're seeing financial buyers, investors come back in. I mean, the one thing about the airlines, to the earlier point, is the fact that airlines were such massive buyers of older aircraft from us tells you that they don't believe what Boeing and Airbus are telling them, of course. So if you're an airline, and most of the airlines that we sold these older assets, they're about 18 years of age. I'm talking about well, probably over 100 airplanes, and we did extensions out to 25, 26 years of age for 17, 18-year-old airplanes. And that was probably best part of another 100 aircraft. So what does that tell you? That tells you that those guys, well, first off, they never thought they would be taking A319s, A320s, 737-800s, A330s that far out into the future. They assumed they'd be replaced by Maxes, by Neos, etc. If they thought the issues were short-term with Boeing, Airbus, the MRO situation, the engine guys, then they'd say to me, look, I just want to extend the asset for a year or two. But because they know the problem is long-term, they're buying the assets, or they're going out till 25, 26 years of age, because they know that this is going on for the rest of the decade. The most advanced airlines are. So that's what we'd see there. Now, so they were buying that because they needed, to my point, it didn't really matter for the airline, was the aircraft, million more or not to buy. Of course, and look, they want to drive down costs. I'm not being flippant about that. But when they saw the problems coming at them with their massive fixed cost bases and not having the lift available, the losses would be dramatic if they didn't have the lift. So that's why they wanted to go to the more reliable aircraft in their view, which is the older generation airplane, and knowing that the new generation either wouldn't deliver or would spend longer in the shop. Now we're seeing, as the lenders, because the airlines are obviously the operators, they saw it first. Now I'd say capital providers are realizing that asset values are actually quite strong and will stay strong for a long time because they can see the demand is real for them and it's not fading.
And maybe on the investor side, and you might talk to us a little bit, obviously GE, you've just finished the exit of GE from the share price, from your shares. Very curious as to what medium-term impact you think that might have on AerCap. And maybe talk to us a little bit around that investor environment and your perspectives on the types of investors we're seeing come or continue to come to aviation finance.
Sure. We learned a lot of lessons from the AIG sell down. When we did the transaction to acquire ILFC 10 years ago now, I guess, and AIG took a very 40% odd stake in the business, similar to what G took. We didn't, I suppose you learn as you go. We knew AIG were going to sell, and of course we had, our investor relations program. I don't think we understood the impact of AIG selling 45% of the biggest lessor in the world into a market that wasn't very liquid. And so what happened when AIG sold that is, there's a lot of hedge funds bought it on the assumption, they bought it at, like all these trades go off generally at a discount to the trading price, and there's hedge funds pick it up and say, okay, I'm buying it at 5% down on the assumption that over maybe a short period of time, a few weeks or whatever, stock price will rally, I'll make my 5% and off I go. What happened at that time, going back now to 2014, 2015, we didn't do enough work within potential new investors, long only investors to your point, that would come in and would buy up when the hedge funds were inevitably going to sell, because those hedge funds were just a bridge really from the strategic owner in AIG into a long-term holder in terms of the long onlys. And that meant that whenever there was volatility or a news item, the hedge funds were selling. And that made the problem worse because the volatility of the stock increased. And volatility is something investors don't like. They understand there'll be some level of volatility, but they don't want to see extreme levels of volatility because it's too hard to hold an investment that exhibits a lot of volatility. It's much easier for them to hold a stock that's relatively flat, and increasing, of course. So that, we realized that then after the AIG sell down, so a very significant effort was made in 17, 18 and into 19 as we got back to trading at book value of our stock, because what was happening previously was any time there was an issue, hedge funds were selling and other hedge funds were buying. We didn't have long onlys getting in. So that took a long time to fix. That was fixed. So this go round with the GE sell down, rather than have the stock go down, we've actually had the stock go up because we'd learned the lessons. And for the last 2 years, a very significant effort has gone into broadening the investor base for aircraft leasing equity. And that's proven to be very successful. Because if you think about GE put, what was it, the best part of $8-9 billion into the market in an 8-month period, which has never been done before, anything like it. So we needed to make sure that we weren't in a situation where there was that much supply coming into a market where there wasn't natural buyers, not just trading technical buyers. Like I said, what we really wanted was the long onlys. And that has been a dramatic change. And that's resulted in the stock price post the GE sell downs going up significantly, which is the outcome we all really wanted and worked very hard for.
And maybe just talk to me the nature of those investors. I'd be curious around. Are they the similar types of investors that have come to aviation finance before, albeit maybe different names, right? But or have you seen any interesting trends around the type of investor that's willing to, as you say, go long on AerCap?
Well, I would say you generally you have value investors, of course, to start with, long-only investors. I think that there's a lot of targeting work goes on to the type of investor that you think will be interested. So you're looking at someone specifically you have to get them over, stop thinking about airline equity. The risk profile of our business and an airline equity investment is very different. If an airline gets into trouble, they cannot pick up their business and move from Dublin to Jakarta or Helsinki or Sao Paulo or Houston, Texas. But we will have the airplane in any of those jurisdictions in 60 days. So it was an educational process. So you wanted people who understood, I think in this situation, the industrial cycle was important, that they could see that the blockages on the supply side are very long dated. They could see capital allocation was a priority of the company, of AerCap, that we are not here for Boeing's shareholders or Airbus's shareholders. We're here for our shareholders. And that means that as we generate capital, do we return it to the shareholders? Do we buy additional aircraft from ordering aircraft from Boeing and Airbus, which is a fine thing to do if the terms are right? Do you do sale leasebacks? Do you do M&A? But what was very important to them was to understand that of that menu, that you pick the right way to allocate their capital at the right time and not just married to one way of doing business.
And as you look now with GE gone and AerCap too big to ever go private again, and we've chatted about this before, even private equity owned, privately owned, are you agnostic as to who's behind you as long as the business is stable and you get the support you need?
I think the business is the most important thing. If that's well run, the other stuff takes care of itself. But yeah, certainly at the balance sheet size today, that would be a long put.
And maybe stepping back and looking at the leasing macros, we've seen that long-term trend of lease assets just generally tick upwards, probably over COVID funding north of 50, maybe nearer mid-50s of new deliveries. You mentioned airlines are generating a lot of cash. Do we see that kind of long-term trend kind of taper off a bit, head towards 50 or sub 50 again? What are your thoughts on that?
I will go above 50 at this point. I think the airlines, and I think a lot of shareholders will say to airlines, really, is this the best you can do? Do you think your cost of equity is the cost of debt of a lessor? That equation won't last. I think equity investors in airlines are going to demand different type of performance, which is happening, where your business is moving people around the world as efficiently as you can. Owning large amounts of assets on your balance sheet that are highly capital intensive, when you already have enough risk in your business model between operating leverage with the price of oil, consumer demand, to layer in this amount of leverage on your balance sheets, I don't think that's going to last longer term. There's a few the odd airline, of course, will own more aircraft, but for the most part, as we look around the world, there's no airline, well, almost no, I say no, never no, but I'd say there's less than 5% of the world's airlines are reducing the number of leased airplanes.
And maybe keeping with the broader leasing environment, you guys have obviously undertaken the largest scale M&A we've seen over the last decade and beyond. Your thoughts on whether that consolidation piece will continue to happen and the importance of scale? You referenced the IG rated lessors, they're probably in a more robust place given this environment. that would imply that perhaps those IG-rated lessors will start to take more of the market, and whether that's taking new deliveries or building out from a consolidation perspective. Is that the trend line you expect to see?
I believe so, yes. I think those, and there's plenty of room, you know, but I do think we're going to continue to see consolidation around those who are able to do it. That being said, there's always room for specialists too. Niche players who have a specialist bent to them, be it in used aircraft, be it in engines, certain types of freighters. But I think those niches are becoming more and more specialized. You know, that you can't say I'm in the used aircraft business. I only buy aircraft over 15 years of age. I think to differentiate yourself, you need a higher level of expertise. I think if I was an investor and someone said to me, oh, I think there's great value in older aircraft, there was. Is there any more? You need a team that understands how to extract the maximum value out of a particular asset. And I'll give you an example. You know, you could say, all right, I want to buy an A330 with GE power engines on it. It's 18 years old. Probably good demand for the asset, get another lease off it. But if you have a shop visit on those engines, do you have in-house expertise to manage that yourself? People tell you they will, but they don't. You know, you need a power plant manager on that engine type to overhaul one of those engines with a performance restoration, LLP replacement. You're into 10 million plus, maybe 13 million an engine. So if you know what you're doing and you've got good people, there's margin to be made. If you don't, you'll probably lose anything you ever thought you had. But that's why I said there is room still for the niche, for the specialist players that are well run. But, you know, like a lot of industries, I guess we are moving towards larger scale businesses. And I think that's probably inevitable.
And maybe touching briefly on maybe environmental challenges, in your perspective on this as a lessor, at the moment, you're moving to newer tech, right? So your fleet is getting younger and you're reducing your emissions in those ways. But is it having an impact on you and either your ability to attract those investors we talked about or to raise debt? You know, how high up does the environment come into those conversations when you're having them?
It's very important to investors that they see that are we doing what we can do? What can we do? Can we put aircraft into the air that burn less fuel? Yes. We're the biggest owner of aircraft in the world. Are we the biggest buyer of those new technology aircraft? Yes, we are. So investors will say, okay, you're doing your bit. No other company or airline or lessor has bought more new technology aircraft than AerCap. So we're doing that. That's a given. And we will continue to do that.
And maybe on the great white hope being in the wider sector is SAF, and is the key building block in you know, reducing emissions or that path to net zero. Can I get your perspectives on SAF? Are those targets in any way realistic? And if we are to get anywhere near them, what needs to happen?
Of course the targets can be hit, but what it will require is extraordinary levels of government and state investment. And it will require not just cash, but things like the logistics of planning. Where are you going to be allowed to build a SAF site? I mean, you're going to build one on a rock in Ireland, you know, that's got a population of 5 million people. How are you going to get the stuff to anywhere it's needed if you're going to do it in scale? Like, that's stupid. Building SAF plants here that you're going to export around the world, you put on a ship. I won't say which. There's another island that's very proud, the national carrier, not in this continent, where they burn more SAF as a percentage of fuel than anyone else. The SAF is shipped in on a ship. That's how madness this stuff, that's kind of madness we're dealing with here on SAF. Now, my own view on SAF is that for aviation is such a small component of the environmental challenges the globe faces. If we're going to spend this extraordinary amount on SAF, the infrastructure required for SAF, as a world, that doesn't seem like a good thing to do. Capital and resources and infrastructure are all scarce resources. You want to put them where you're going to get the biggest bang for your buck. Fast fashion does more damage by multiples than aviation. Agriculture, cement. So all I'm saying, I'm not against any of these businesses. I'm just saying, I think we're in our little bubble here in aviation saying we need to do this because we do get bullied by politicians who think an airline is an easy thing to prod at and it's something in the sky, it's visible, it's perceived as big business. But the reality, when the politicians realize the quantum of investment required, they're going to say to themselves, we don't have that, and if we do have it, what's the return from putting that investment into aviation? It has to go to somewhere where we're going to get a bigger bang for our buck. If we're going to do something where it's agriculture, it's cement, where it's responsible for a much greater share of emissions, that's where you want to put scarce resources. And I do think, look, it's incumbent upon, the industry has been fairly hopeless at plying its own case in front of politicians around the world. How we do that going forward, it's easy to be critical. How to do that, become more effective about explaining what are the requirements to get to these targets. You have politicians who will just say something, stick it into law, thinking it's in 2050, it's a long way off, because it might get them a few votes. But we as an industry have to be a lot better at organizing ourselves and explaining what is required to do what the politicians want. I do know that in one government meeting, I won't say which big country, it was explained to the leader of the let's call them two ministers, what was required, and they said, we're not going to do that. And they said, yeah, we know, we should say that after the meeting. You're not saying that either. So, these are the challenges that the industry has to deal with. We haven't done it with any great effect so far, and it is a serious challenge facing the industry. You see what happened in Amsterdam recently, which is ridiculous, where Schiphol Airport and local politicians said, we're going to stop JetBlue flying in next summer. What was the immediate reaction? Like, this is the kind of politicians that we have these days, where they thought they could act in isolation against the United States, a small country in Europe. What was the immediate reaction? JetBlue go to the United States and say, we don't want KLM flying into JFK. How long did it take to get the decision overturned? Pretty quick when the Dutch backed down. That's the real world we're in. That's a real world example of what's coming at us. And so the sooner we can get to real world discussions as an industry, the better.
Who's the organ for that discussion?
That's a good question. We haven't found one yet. IATA would be the one, obviously, and Willie's a very capable person, obviously, and highly respected. But is IATA representative of the industry? Not always. And IATA does have different, that's where, I think IATA, low-cost carriers for the most part aren't in IATA. The lessors go along, but, with the poor relations there, it's an airline event. And how do we, and the OEMs as well, how do you come together? And I think there's no need to reinvent the wheel. We have an organization like IATA that is globally respected, that will get the audiences that are required. But there has to be a consistent strategy from the membership of IATA. The membership probably has to be broadened a little bit and to take in other participants in the industry. And there has to be, which is not the easy part, there has to be an agreement on the strategy and how to approach it in different world capitals. These are hard things to do, Joe, but if we're not going to do them, I do think we're going to see situations where airlines and the aviation industry continues to get dinged unfairly and other industries seem to get a pass.
And Aengus, maybe just in closing, stepping back and look at AerCap and the wider sector, lots of positives around there that we talked on the demand side, lots of challenges on the supply side. What do your optimism levels look like looking out into 2024?
I'm very optimistic. Look, people are going to travel. I'm pretty sure more people are going to travel next year than travel last year. I'd be highly confident of that. Yes, there's always issues to look to. I think we'll see, it looks like we'll see, we've hopefully hit the high on interest rates. As I said, we're all over 50 basis points now from the high in the 10-year Treasury. The dollar has weakened a bit. That's another very important component. If you have a very strong dollar, that really hurts, of course, many airlines and participants around the world because they don't earn dollars. So their cost base goes up significantly outside of their control. So look, overall, I'm very optimistic. I think we know that post-COVID, households will prioritize travel. I think it'll be a while before the OEMs get their act together. I think it'll be a while before they're willing to be able to tell the airlines just the impact of what's happening. So that would be the one thing, I suppose, from the customer base that I'd harp back to. So I'm very optimistic, generally speaking, but I would like to see the OEMs. Candor is one thing, but of course, in these massive organizations, it's being able to filter up to the top the information that's actually going to happen, and that no one's blocking or saying, look, we are managing to perfection here, that we think the turn times in the engines will be 300 days, 400 days. But that's based on absolutely everything going right. That won't happen. Or same for production of aircraft. We are assuming we can build 70 airplanes a month based on everybody in our supply chain getting everything right. That isn't going to happen. Because the knock-on effect, as I explained earlier on, to the airlines, when they have hired all their pilots, all the costs associated with that, and the airplanes don't show up. And not only that, in a lot of jurisdictions, if they don't fly the stuff, they're going to get hit for pretty hard penalties too. But as I said, Joe, look, overall, aviation's a great business. I think that we're going to continue to see strong growth around the world. And so, yeah, pretty bullish.
Well, on that hopeful note, Aengus, on behalf of KPMG and Airline Economics, I'd like, as always, to thank you for your time and insights and wish you and AerCap a very successful 2024.
Thanks very much, Joe. Pleasure.